I'm sure you find the same thing, that your bullishness is often a function of your vintage.
Oftentimes, it's not even about how good you are at playing the game. It's about actually choosing the right game to play.
While the meme coin stuff is happening, there are opportunities in DeFi, for example, that are not as sexy and people aren't really paying attention to.
You've got the money, you've got the bags, you
right.
need the distribution. Welcome back to The Roll Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yield on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
All right, we're live in Hong Kong. Akshat, great to finally meet you in person.
Good to meet you in person.
I know that we had Arthur on the pod, I think with Murad talking about the meme coin super cycle, which is now like the subject of all the hate on crypto Twitter.
Yeah, that's right.
Yeah, but we're definitely still in a bull market, so the vibes are up here and things are good.
I agree, yeah. Even though it's sometimes different parts of the bull market don't feel like a bull market, it's still a bull market.
Yeah, is this your third crypto cycle or your fourth?
So I originally bought into Bitcoin in 2013.
Okay.
So you could kind of consider that to be a cycle. It was a short-lived cycle, that one in particular.
What was that
13,
experience
14.
first, actually, if you don't mind? How did you find that?
That was surreal. So my buddy, who now works at Fidelity's VC, focused on crypto, he sent me an article on Salon or Slate, I don't remember which one it was, that was like this new crazy encrypted currency called Bitcoin. It was like summer of 2013. We just graduated from undergrad. And I thought this is pretty crazy. And then I read about Silk Road, and I'm from Austin, and Ross was from Austin, and they kind of, in my eyes, I was like, this is one of the most successful startups out of Austin. There's like Dell, there's a couple other names, and then there's Silk Road.
Yeah.
So I was pretty inspired, and I had some friends who were buying substances and things using the platform, and then I was like, you know what, I'm just gonna figure it out. I'm gonna test it out. So I downloaded a few different types of ways of accessing crypto, and they all sucked, and then I used Coinbase. Bought Bitcoin at the end of 2013, and I bought it at like close to the peak. It was like something like $1,000 and $900, and then I started buying some more, and then it crashed, right? And then it kind of lasted maybe 2 years. It was hovering around $200, $300 per Bitcoin. At that point in time, I just wrote it off. I just thought, Bitcoin is fucked. Okay, I learned something. It's probably a cool experiment. I'm sure someone will iterate it in the future and make a better version. But then when smart contracts became a thing in 2016, 17, that was the first cycle where I felt like, okay, wait, they're onto something that I didn't really understand the full scope of. That's when I really started buying in, and I entered the industry full-time in 2019. So I've been through, you could say, like 4.5 cycles, depending on how you define a cycle.
Yeah, I think for me, the 2017 one was dorm room for me and my current co-founder of the Roll Up, Robbie. We were at the University of Florida. That one didn't feel real to me. That one was still my first iteration where it was like, I don't think this is going to come back. Whereas after 2020 and 2021, I was like, okay, like we're definitely not going anywhere now. Because of DeFi and on-chain and all of the happenings there. So
yeah, I think I'm sure you find the same thing, that your bullishness is often a function of your vintage. So when you start, the first cycle you get fucked, you're like, okay, this is done, I got scammed. Second cycle, third cycle, you really start to realize, okay, it comes in waves.
So has your thesis, whether it be personal or with Maelstorm, how has that evolved from buying Bitcoin, seeing it as kind of this new technology, smart contracts, seeing this as enabling the future of potentially like a plan B of finance, into now, I know you guys are quite heavily involved in DeFi, stablecoins, RWAs, tons of different kind of sectors. What has been your personal evolution, and also for Maelstorm on the thesis side, for how you guys see the crypto world evolving?
Yeah, each cycle has its meta.
Yeah.
Right. So like before, let's say 2013, 14, it was, does Bitcoin even work? Does this shit, can you transact with it? Can you send it around? Does the validation mechanisms actually function as the way that they're described? And we kind of found yes. And then in 2016, 17, 18, it was about smart contracts. Do these even work? All the applications on those during the white paper scams, that's at that point in time, I was like halfway into my private equity job. And I put a lot of my money into that, and I lost the majority of my net worth in that cycle. But same kind of thing, one thing like stuck, and that was smart contracts. And then DeFi summer happened in 2020, 2021. That was kind of the first real applications of smart contracts, and something that people can actually use. We saw DeFi worked, and a number of those projects also went to shit, but a few survived. And then now in this cycle, you could kind of argue that one of the biggest metas was staking infrastructure in the beginning, right? Okay. And then it kind of evolved to, okay, now how do we combine that with DeFi? It's like Pendle, Athena are kind of like the combination of these two worlds, DeFi and staking. And then at some point, this cycle became a little crazy with the meme coin stuff.
And AI as well.
Yeah, AI, yeah. What we call AI, at least, yes.
Right.
Meme coins that are named AI projects. There's definitely some of that. I got roped into a weird meme coin thing in the last 72 hours that I can tell you about later. That
really?
Was, yeah.
Okay.
But from here, it feels like the real story is going to be
where do we go?
The institutional kind of adoption, right? And so that's where real world assets comes into play. But that's not going to happen until regulations are in place, and we're looking at like a 2-year cycle for that. So I don't think we're going to get the benefits of the regulatory changes that we're expecting to see until probably the next cycle.
Any particular liquid market ideas that you have currently? Anything that you're seeing that looks imbalanced or inefficient from the fund side or from your personal side that you're excited about?
Yeah, so for context, Maelstrom, we founded Maelstrom in 2022, kind of in stealth mode. And originally we were just kind of like feeling this out. I was doing a few other things at the same time. Arthur was doing his house arrest at that time in Miami, and we were just ideating on things. One of the first deals we did was Obol, which is like a distributed staking validator technology thing. And that was when we got basically into the whole world of staking related infrastructure. Staking infrastructure was the first category we got into. And from there, we started getting into DeFi. That's when we found Athena, EtherFi, some of those companies that again, as I mentioned, Pendle as well, that intersect those two worlds. But we remain focused on venture. We only launched the liquid arm about 3 months ago. Okay. So we onboarded Nick, who is partner of Maelstrom Liquid. And he used to be Arthur's boss.
Okay, nice.
Which is funny.
That is funny. Arthur having a boss is funny.
Yeah, exactly. Yeah, back in the day, it was at Deutsche Bank. Nick was head of exotic derivatives for Deutsche Bank Asia. And Arthur used to sit on a little stool. He told me the story. He'd sit on a stool next to Nick and just kind of like watch him do trades and learn. Yep. And now we brought Nick on board to help us build out liquid strategy. So far, we've been taking mostly thesis-driven, like venture-like bets in the liquid markets. So one example being, this is kind of like, I think, reflective of the kind of work that we like to do. Our analyst, Lucas, he's a research analyst, over Christmas, while all the rest of us were hanging out with family and partying and stuff, he was deep in the weeds, looking at DeFi projects and just learning about them. And he noticed something weird, that a lot of the DeFi projects were entitled to a bio airdrop. And the size of the bio airdrop for some of these projects, and most of them, exceeded their entire market cap. Yep. So that was the kind of thing that, we like to identify, uncover. We made the trade and we wrote about it, we published it. And, it was one of those like 3x within 12 hours kind of projects for us. And I think there are more similar opportunities where there's very mispriced assets that you can only really uncover through deep research while everyone's distracted with other stuff. So, while the meme coin stuff is happening, there are opportunities in DeFi, for example, that are not as sexy and people aren't really paying attention to. I'll give you alpha on one. Okay. This project we were negotiating with, and I think they'd be okay with me saying this. We didn't close the deal because they were so bullish on their token that they wouldn't accept our price. And we always like to negotiate. We never pay the full price. And they wouldn't accept it. And so I just bought it with my own personal allocation, Fluid. I think that's cool DEX.
Yeah, they've been crushing.
They have, yeah. And kind of under the radar.
They're like the under the radar DeFi kind of dark horse of this cycle so far. Yeah, and it's also like a new token, good token type of thing, or they did that token swap or something, right? Or
Yeah, they were exploited a while back.
Yeah,
and,
exactly.
Yeah, they just swapped to kind of did a reboot with the business.
Yeah, yeah.
So yeah.
So I've been pushing this idea on Twitter. I mean, as of the last, I guess, 72 hours, which is like return to fundamentals. I mean, meme coins have gotten destroyed. Like people have been harping on this for, I don't know, the last 6 months. I think like, oh, we need to return to this idea of actually valuing these things and having models. And meme coins have just continued to outperform.
Yeah.
Do you think that that trend has shifted now after the Libra, Trump, Melania kind of craze? And like, just what's your view of all that? And how does that affect Solana as well?
Yeah. There's so many tracks within crypto. It's hard to encapsulate them all into one bucket, right?
Yeah.
So meme coins, like proper meme coins, for example, the Melania, the Libra, all that kind of stuff, those are investatainment kind of casinos, right?
It's financial dominance. It's like a domination from the person who's launching it on you.
Yeah,
It's
pretty
a
much.
very weird like FinDom thing.
Yeah, it kind of is. And everybody gets in thinking they'll be the first out.
Yeah,
right?
but they're never, and then they all get dominated by the creator.
Right,
Or
exactly.
whoever snipes it.
But what's funny is that they're pretty open. At least you would think people by now in crypto would understand that, look, if this is getting launched, the last one out gets fucked, right?
Yeah.
So I feel like they're implicitly quite open about them being basically a Ponzi.
It's like weirdly honest.
It kind of is, yeah. So
okay.
that's one category within crypto that'll always exist because there's always people who want to basically get rich quick. And that includes the retail guys who buy it. It's not like the first guys who buy it are innocent or the second guys or third guys. Everyone wants to just not be the last. So if you just got fucked, then you can kind of claim you're a victim, but you knew what you were doing. That's the meme coin side of things. But I think to your point about return to fundamentals, all all assets have mimetic value.
Okay.
Every kind of asset, even in TradFi, stocks, homes, they're not actually valued at what their intrinsic value is if you sum the future cash flows.
Yeah.
The earlier stage you go, the greater the percentage of the total valuation that is mimetic in nature.
Okay.
Crypto just happens to have a lot of really early stage projects. So even more of it is mimetic value. So if you were to run like discounted cash flow on the average company in the stock market, a lot of them will be like, okay, why are these overvalued? For reasons clearly that are not just about intrinsic value. You go to crypto, you do the same thing. You see they're all overvalued if you use that basis, almost. So everything has meme coin aspects to it. And I think a return to fundamentals doesn't necessarily mean evicting all mimetic valuation methods, but more just being aware of it and just knowing that, okay, part of this is hopium, part of this is actual cash flows. And the more we see tokens start to implement fee structures like EtherFi, Athena, there's a long list of them that just straight up pay out, kind of like securities sort of, then you can actually calculate the DCF on the valuation of those and then add those to the hopium that is there will be growth.
Right. Yeah. And that's kind of what people investing in those ideas see. And then those who invest in the pure mimetic side are almost just like, we don't even care about any of that because this is all overvalued anyway. There's no value that can be set on, Dogecoin, right? It's just it's a dog with a hat, or it's a Doge. So kind of shifting towards your personal mental models though and view towards the space. How are you for our audience, a lot of builders, investors, VCs, sophisticated retail, if you will, those some with size, some who are kind of more getting started. Like, what is the mental model that you take day in and day out to the space to invest from kind of a personal financial level? Like when you're allocating into crypto and you're pulling money out cycle over cycle, like how do you maintain a level of financial insulation, or how would you kind of advise somebody to think about their crypto holdings as a part of a broader portfolio strategy from like a financial lens?
Yeah, I think for me personally, only about a third of my net worth is in crypto. Okay. If you exclude, the valuation of stuff in Maelstrom, my own personal portfolio. And within that, maybe half is in alts, what we call alts. Bitcoin ultimately is, in my view, one of the safest assets to hold. It's the first thing I got into in crypto. It's been a consistent performer. It's digital gold. I don't need to pitch the same shit. There are not that many shenanigans that you can play with it. And it's not as dependent on, you brought up the point of Solana's, the fact that it's tied to this meme coin narrative. Bitcoin doesn't have the same kind of associations to ride one thing, and then when that one thing gets fucked, it gets fucked.
Right.
So I think it's good to have a staple like that, in your food pyramid. As far as Maelstrom goes, we're a little bit more active. So I personally am more of a buy and hold type of person.
Okay.
I hold blue chips. I hold projects that I think will become blue chips. With Maelstrom, it's very cycle dependent. So what part of the cycle we're in dictates how we play. So in the bear market, that's when we were deploying like crazy. We're excited, and it blew my mind that we would talk to some funds, and this was like ended 22, early 23. We'd talk to other funds, and we'd hear, yeah, we're not really deploying right now. In my mind, I'm like,
on the venture side, right?
yeah, I was like, are you fucking crazy?
Yeah, this is the time.
It's insane. Yeah,
Yeah.
like that's exactly what you should be deploying at.
Whereas they would want to deploy perhaps like now or last couple months, last 6 months instead, right?
Yeah, exactly.
Which is ass backwards.
The same thing's gonna happen. So I guess part of it is if you get blown up, okay, maybe I get it. Then you don't have money to deploy. That's one thing. But when there's dry powder and people weren't deploying bear markets, it blew my mind. So that's when we deploy the most. And I think even as a personal investor, you should have a list of beaten down tokens that you want to invest in when valuations come down. It's going to happen. It's cyclical. So, at some point this year, things will probably get a little bit worse before they get better. And I think we'll be deploying. We kind of timed some of the market cycles pretty well in the last 3 to 4 months. We sold a lot of stuff in December, January, prior to Trump coming to office because we thought there'd be a Trump dump. And there was. And now we're sitting a lot of cash. We're waiting a little bit for more people to freak out, and then that's when we go right back in. And I think people should do the same thing.
People are freaking out, but not like deathly freaking out right now. They're like capitulating in a lot of things, especially on-chain tokens. Yeah. Those that don't if it doesn't have a centralized exchange listing or any sort of like market making happening, they're speed running to zero right now, which is it's a sight to see for sure.
Yeah, it's true.
Okay, so let's kind of zoom out to the venture side then. Before we talk about some of the actual kind of investing, I want to understand, because so we have a ventures arm. We've done like 50 deals. We also were going heavy in like late 22. Early 23, all the way through 23 into early 24, we were going really, really heavy. Last 6 months, 8 months, we've kind of just like, we're basically on like okay, this is a project that I don't really care. It's a good valuation. It's a really good founder, big check or no check. We're not really doing the like, kind of mid-sized, okay, it's early in the cycle, low valuation checks anymore.
Yeah.
Our thesis in 2022, 23, 24 was that the mistake here is not picking the wrong bet. It's just not allocating. Right, that's the mistake to be had here. Is like let the sentiment get to your head. Don't allocate in the time and miss what is going to be this cycle's runners. Sure, we could have probably picked better or sized better, but we were just happy to kind of spray there and do the pray, right? But there's a method to the madness that we've learned just in the last 18 months or so, Robbie and I. And so I'm curious from a founder perspective. Let's start here. What are the traits of the successful founders that you've backed in hindsight? That you've seen, and then how has that led you to then look for those traits in future founders? And like, is there a specific archetype that you can explain to us and to future founders or to investors who are watching that this is what they should look for based on your previous success? And obviously we can't repeat history here, and it's not a guarantee, but there are often signs.
Yeah. So I've been an investor since 2016. In private companies, and before it was private equity, it was stuff like veterinary lab roll-ups and local distribution manufacturing stuff in the Midwest. Then I transitioned to crypto in 2019, started doing investments in mostly CeFi and sexes and things like that while I was at BitMEX Ventures. I was head of corp dev there, and then from 2022 onwards in more like degen crypto, on-chain stuff. And across all of that past almost decade of investing, the number one trait and quality that I've found to be the biggest indicator of success is integrity of the founder. So, I think especially in crypto, but even outside of crypto, there's not that much you can do to control bad actors and bad behavior. It's not that much governance, and in crypto, there's even less sometimes, arguably, depending on what aspects of the business. I think it's hard to suss out. But you just see little ways they respond to small things. Like, do they get kind of indignant when if you just bring up someone in the industry to them who has sort of a questionable reputation, see how they react. If they're just like, yeah, okay, whatever, it's fine. Or if they say something like, this guy represents everything that's wrong with crypto, you can just kind of pick up, okay, this is how this person thinks. He cares about ethics, reputation, long-term relationships, etc. And I think we found that in some of our most successful projects. Think of like Mike from EtherFi or Guy from Athena. These are some of the traits that people know that they're high integrity. That's number one. Number two is extreme humility. If you look at Arthur, right, he's like a self-made billionaire, young. When he started BitMEX, he was in his 20s, but he's also a very humble guy. I think anyone in this industry who's met him at a party, you say hello, he's going to say hello back, right? He's not like, there are some people in this industry who are like worth 100th of what he's worth, who act more dickish than he do, but in various settings. And I think the same thing plays out in BD. It plays out in how you hire, right? So a more humble person is probably going to attract better quality talent to the company, probably going to have a better time relating to customers, to potential partners, etc. So that's what made BitMEX successful largely, and that's what we've also seen with some of these investments that we made. The kind of orientation of I'll work with anyone who can teach me something, and then that kind of segues into the last piece is partnerships, the ability to bring together a wide variety of different people who can help the project. Okay. So, for example, with Athena, they brought together all the key, basically every major SEX and custodian and market maker and all the tier one investment firms all together in one place, and a bunch of KOLs. They were kind of the first ones in that cycle, in this current cycle, I guess you could say, to do that. And that was integral. It wasn't just like, oh, let's create a logo splash that'll bedazzle everyone. It wasn't about that. Everyone they brought on the cap table was a key component of their business model. And you see founders who have that mindset will bring everyone along, also tend to be pretty successful. I think those are probably the three biggest things. Beyond that, just like, is this person smart? I mean, that's kind of like probably the fourth thing I'd say. Yeah. But those first three are more important than the last.
Yeah, I appreciate the thorough answer. I tend to also think that there's a level of like this chip on their shoulder that I found, such that they've either they've gone through something in the past, or they can be even insecure about certain things that has happened to them, or they have something to like prove, right? So like something that you can't teach. Also, if you come from a rough background, you also, that's all that you know. So your level of drive is just extreme compared to somebody who grew up in like middle class America or something, right? True. You like, there's no like the lack of a plan B, I've found has also been something that's very, like, I want to work with people that are similar like that. They can also be very cutthroat if they are your enemy. So that's true. You don't really want to make enemies with the people that have that kind of chip on their shoulder, but they have a certain drive to win that I think is hard to replicate in that sense. And
that's true.
I mean, also timing and luck, right? Like timing and luck. Are you willing? Like, are you a man or woman in the arena, willing to put yourself in the butterfly effect of life? Yeah. Right. I think that's like a personal success thing. Like, I mean, I think even just sitting here, being in Hong Kong is an example of this, right? The people here, you take a chance with some money and some time, and you go and you try to make something happen. I mean, that's just capitalism at its finest. But frankly, I think that there's something to be said about that.
Yeah, for sure.
Yeah.
Now, the only other thing I'd say is TAM is also huge. That's one thing I found with this. So this is the first time I invested in projects of this variety, right? These are kind of on-chain businesses. We don't even give a fuck about the equity for most of these companies we invested in. It's the first time I've done this. Yeah. And the mistakes that I made were investing in fantastic teams, projects, whatever, but tiny TAMs. So
like, what's an example, or like what's a sector that's
a sector? So like MEV, for example, right? Like, I was bullish on the concept and thought there was a lot of value to capture back in like late 22, early 23. And I thought, we need to have an allocation in at least a couple of those types of companies, invested in them. They did well. They're great companies, great founders, respect them a lot. But ultimately they're capped. If the size of the industry you're
doesn't
targeting
grow, right? It's like, that's a really good point. And I've had that like constantly reminded to me in crypto, and I've tweeted this a bunch of times, which is, oftentimes it's not even about how good you are at playing the game. It's about actually choosing the right game to play.
Yeah.
And that's very applicable here. It's like, it's not like, do you pick, I mean, there are winners in categories. Like, for example, EtherFi disclosure with the role of Ventures invested, Maelstorm invested. But they're like the clear restaking LRT winner. Like,
Yeah.
But, as long as that category grows large enough, if you spread your bets out a bit, there's still some winning to be had. But if you just pick the wrong game entirely, then you pick the wrong category to invest in, then it doesn't matter if you pick the winner of the losing category, right? It's like we're playing the wrong game here.
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
Yeah, true. And then I guess the other point that's related to that is that it's also about the ability to pivot to the right category. So EtherFi is a great example, right? The staking thing wasn't enough. They went to restaking, and basically the first ones to do it.
And now even further.
And now they're exactly. Yeah. They're constantly pivoting.
Because restaking had its time in the sun.
Yeah.
And then it's still an important technical concept.
Yeah.
But it's not exactly like the points meta is clearly over.
Yeah. Oh yeah, for sure. Yeah. But like those MEV bets I made, it's kind of hard to pivot those too much. We'll see. Maybe intense.
But that's part of the humility as a founder, though, isn't it? It's like, okay, my idea wasn't exactly right. My original thought, I'm gonna go and I'm gonna do something else. But that's just such a hard choice. Like, this is the difference between being a founder and a speculator, right? Speculator, right? We can have as many bets as we want. Theoretically, we can get in and out of different things. Yeah. We can change our mind and change our thesis and change our portfolio. As a founder, and like we experienced this on the roll up. Like, we just stuck to the plan day in and day out for 3.5, 4 years. The last 6 months, we've made more revenue than the first 3.5 years.
Right.
We didn't pivot though. We didn't change. But like, it wasn't working that great.
Yeah.
So like as a founder, you have this tough kind of dichotomy or divergent path where it's like, do we play the game of the S curve where it kind of takes a while and then you pop, which happens to a lot of these crypto companies as well, or do you pivot and risk brand reputational thing and then pivot again because that pivot didn't work? And then you end up like some of the brands that I think a lot of people know and we don't need to say that are pivoting for each cycle, right?
Right.
And so you're playing this game of like steadiness wins the race and like steadfastness is important, but also you need to be humble enough to realize that if you're playing the wrong game, pivoting to playing the right game could end up doing much better for everybody involved.
Yeah.
So it's kind of this like, navigating that divergence is tough. Like, being a founder is not easy.
It is, yeah. I mean, as you point out, right, even being a founder of like a fund structure, what you guys are doing, it's similar. It's maybe a little bit easier than founding a crypto startup, but yeah, it's still difficult, and striking that balance is hard.
Yeah.
So we're kind of going through something like that right now. We've got our, I mentioned our venture book, and we've got our liquid book.
Yep.
Now we're exploring a buyout / private equity strategy as well.
Okay.
And we brought on board someone. So I have a background in private equity. We brought on a partner of Maelstrom buyouts to help us out as we scope out opportunities. And he has a background in SaaS PE for the last decade. He worked at a spin-off fund of Vista Equity Partners in Austin. And he and I have been hunting for deals. And we made an offer to buy a somewhat prominent media company in the crypto space. Negotiated pretty hard. It's a very different dynamic than crypto investing. It's not an on-chain business model. It's not a scalable.
I see. You guys need the distribution, don't you?
Musk has his Twitter.
You've got the money. You've got the bags. You need the distribution.
Yeah. It's part of the full scope.
It is.
If you're a family office, you need everything, right?
It is like that is our value. That is our value add for investing for teams that we work with. And crypto is so niche. Yeah. It's like crypto Twitter and it's some media and Telegram, and it's not like you go run Facebook ads. It's not like you have SEO and things work, but it's a very niche media style.
It's tough, yeah.
Anyway,
so trying to acquire these companies is also very challenging.
Yeah. So what's that look like? Yeah.
So I mean, that's a pivot. It's not a pivot. It's a revenue line expansion.
It's a horizontal expansion, right?
Yeah. There's lots of synergies with the rest of the stuff we're doing, but the concept is we buy companies, and the process for that is a lot slower.
Yeah.
And also the education process is slower. Some of these founders, they're like, oh, but it's a crypto company, therefore the valuation metric should be whatever I want, you know?
No, I know.
But it's hard to teach them, like, no, actually, you're not running a crypto company. This is actually not on chain. You're a traditional business that's a service provider to the crypto industry.
Correct.
And so your valuation metrics are quite different.
Okay, so let's talk about this, because Robbie and I have been thinking about this a lot. Like, is it even possible for us to exit, right? Because we are so much the face of what we're doing, and you know, we're kind of expanding horizontally, and we have enough systemizations in place to allow, you know, like me in Hong Kong and the business is running fully behind the scenes. Robbie's handling it. We're both out. It's still running, but like it's very much us. But you know, we're not launching a token anytime soon. But we are making a significant amount of real bottom line post-tax profit. Over 3 years, we've shown, you know, multiples of growth. It's looking like this year will be the biggest ever.
It's amazing.
So like, I'm not gonna talk about the numbers on the recording here, but like, like if I was to approach you with like, okay, what would buying out the roll-up look like? Or, you know, insert media company here. What would you want to see, and like, what would your valuation look like, or like your evaluation process of the numbers? And maybe we can use an example here, because it's way different than like, oh, you know, I'm signing a SAFT at $100 million valuation because, you know, a similar comp is trading at $2 billion, so it makes sense. You know, my media company is not worth $100 million because I don't have a $2 billion token to give you. Right. I just have equity and I have profits and I have numbers. But, you know, so maybe I'm super curious.
Yeah, so there's two types of businesses that we've been looking at, and we're in deal processes with a few. One is what you described, right? Just like it's a pure equity play, and it happens to be in crypto. Two are crypto companies that should have a token, have been planning a token, but haven't done it yet. And maybe the founders want to take some chips off the table, and we bring in a team to launch the token for them. And as part of the deal structure, we pay them back with a portion of the token once we launch it for them. So it's two different strategies. The latter, it speaks for itself, right? It's just kind of like an earlier stage project that is a crypto company, is on chain, we'll have a token, et cetera.
Wants to launch a token,
But the former, that is where a lot of opportunities are. So right now, there's a lot of crypto companies doing the same thing. How many data providers are there? Too many, right?
So
they all do
many.
the same shit. How many, you know, like forensics, on-chain forensics companies are there? Like 6 or 7 doing the exact same thing. There's just a number of categories like that. Media, there's like 12, all doing the same thing. So I think for us, when we look at evaluating these, we look at one, is there a chance for inorganic growth, as in a roll-up strategy, to buy multiple of these, combine them together, and find synergies? Then that's enticing. That's more exciting. We look at if it's a very founder-led project, or company rather, not project. Then we want to see, has there been a handing of the baton before, or is this the first time? Because that changes the risk dynamic.
Our first time for sure.
Right. So then for you guys, it'd be like, okay, we got to see.
Arthur and Akshat as my boss. I don't know if I can do it, man. I don't know if I can do it, Akshat.
Yeah. Well, we probably hire someone to come in the middle, right?
Right.
So,
okay.
Yeah. So that's better or worse depending how you look at it. But that's key. And if that hasn't happened, then you probably have to do like an earn-out structure, right? Where there's like a 2-year handoff period.
Correct. Yeah.
And then we see if the company can survive without you guys. So it also impacts the deal structuring.
Right. Yeah. There's certain like key man risks and different things there. So would you say that then, like, if my goal isn't to launch a token here, like from a friend to a friend, like is building my business in a way that is structured around ability to be purchased in the future, like purchasability, a good strategy then?
Yeah, I think it's the only strategy.
Because the way that I see us getting venture-like returns in the space effectively, or an exit-like return, and this is why we started our ventures arm like 2 years ago, is like, okay, we're just going to deploy our capital into the deal flow access that we get.
Yeah.
Because that's the only way that we're going to get this kind of like 100x. Right now, I can't sell myself. I can't sell Robbie and I's podcast because it's just us. I mean, sure, there's a model where we could and kind of go under some holding company or something, but like, would you say optimizing for purchasability for crypto entrepreneurs that aren't launching a token is the better strategy? And then if so, like, I know that we talked about it. What are some ways to build out a more exitable business in general?
Yeah, so for you guys, it sort of depends, right? If you're a media company with a fund, or what you probably are is more of a fund with a media company, then it's sort of a loss leader product, right? I mean, it still might be profitable, but it's not as profitable as your fund, I assume. it's hard to untether those two things, right? Because if you want to keep doing the fund, part of what made you successful in the fund is that you had the media arm.
Correct.
And sort of vice versa, maybe.
Correct.
So if you want to sell off just the media company, then the buyer has to be aware that, okay, we're not really getting the best part of this.
Correct.
But if you do want to sell that, then I think, and it's not a loss leader product, and let's say it's its own independent business line, then I think the only way to build a company is to prepare it for sale. That's like the only reason to do it.
Correct.
You're not going to IPO this thing. And
Well, that's been my like train of thought. Like I've been just like ideating the last 2 years. Like we are making a good impact and educating, and we're doing a lot of good in the space.
Yeah.
But like I'm building something that I'm building equity in that I'm not sure how to like get the end result that like some of my friends who are doing e-commerce work
Right.
have gotten already.
Yeah.
Or will again in the future.
So you got to reduce the dependency on just YouTube.
Right.
Diversify revenue sources, and then make those look more recurring.
Right.
If you do those three things, it'll be saleable.
And that goes for all types of businesses that are not launching a token.
Yeah.
Systemization, diversify revenue,
Yeah.
and
Make it recurring.
make it a recurring product.
Yeah.
Which some of which we have, and we have some like ad-free podcast models. But it's very just like getting that off the ground, because that's not where the money is, man.
Yeah.
The money is with the projects.
Yeah.
The money is with the investing. The money is with getting the allocations, getting the opportunity to invest early. As you said, like the fund is kind of what drives the outperformance here, long term, right?
Yeah, for sure. And are you guys going to do an outside fund with outside LPs or stick to?
I think just stick to ourselves.
Okay.
We're very anti-authority. You know, we're very anti-boss. Like we don't.
Yeah.
We've tried stuff in the past, Robbie and I, and we go head to head enough. Like we don't need to go up against anybody else.
Yeah.
Yeah.
I think we're kind of the same way.
Yeah, you know what I mean? Okay, well, let's talk a little bit about your personal journey, and then we'll kind of wrap here. Sure. I'm just gonna break the seal. You mentioned that you did a microdosing phase prior to the podcast.
Yeah.
What was the stage of life there? What would you recommend it? What did you do? Yeah. Tell us about it.
I mean, I would recommend all sorts of experimentation.
Okay.
I have experimented with most major healthy psychedelics.
Yeah.
And there was a period from 2016 to 2019. So before I was in crypto, I was working at the private equity fund in Chicago, and I had a lot of time on my hands outside of work because Chicago wasn't, it's not a place I was from. I didn't have a deep network there. I grew up in Texas. I went to college in Philadelphia, lived in New York after that. So when I came to Chicago, I was basically just working, maybe like 12, 14 hours a day, and then sleeping at night. And then I had a lot of time in the middle to just kind of do stuff. So I experimented with a few things. One of the things I tried was microdosing LSD on a daily basis for almost a month.
Okay.
That didn't go well. And
Really?
then the other one I tried was...
That sounds nuts.
It's a little too much, yeah. The other one I tried was microdosing shrooms. That went well. But at some point...
Every day as well?
That was every day, yeah. Like a tiny amount. That I had a Portland-based therapist who would basically mail me the stuff. And I think back then, I don't know what the legality of this shit was. I don't
Doesn't matter.
Yeah, I really don't remember, but she just mailed it to me.
Yeah.
And
so you would just do a little bit every day in the morning?
Yeah.
Just part of your morning routine?
Yeah, and I think when combined with therapy, yoga, breath work, a mission in your life, then it's useful. If you're just doing this, it's not going to solve anything. So I remember one of the first times I won respect from my boss was about 2 weeks into the shrooms microdosing. And I had let's see, what did I have? I had something that made me, it was therapy. I had therapy. So I was working on a live deal, and I had to leave the office early. It was like 8 p.m. And he went to go do something, and I emailed him and said, hey, as I mentioned, I've got therapy tonight, so I got to go back. And then he sent me this like kind of nasty message. It's like, you got to be dedicated to this deal. You can't just walk away in the middle of stuff. This is important, blah, blah. And because of the work I was doing, I was like maybe 24, 25 years old. At the time, I was like, okay, I don't want to fuck with a partner, whatever. But the work I was doing, plus I think the shrooms just helped me like ease into myself and feel more comfortable with sticking to my truth.
Yep.
I just told him, your message is inappropriate. Therapy is very important to me. I'll see you tomorrow. Yeah. And I never would have done that before. And I was kind of expecting, I was like, oh fuck, I think I'm probably gonna get a dressing down.
Yeah.
He sent me a message. He said, you know what? I'm really sorry. You're right. I'll see you tomorrow. Have a great therapy session. And that was the first time I realized, okay, human beings respond to other human beings.
Yeah.
That it's not like this hyper hierarchical structure that, you know, sometimes maybe Gen Zs and younger people might see it differently, but millennials, a lot of us saw it as like, it was a very hierarchical kind of world we lived in. And that was a moment that helped me break free. And I think the shrooms, microdosing played a small role in that.
Yeah, and
combined
allowing
with
you to
everything else.
expand your mind a bit. And the LSD probably really threw you on a month long of anti-authoritarianism for sure.
Yeah, that's a good way to put it.
I know that that's been the effect in my experience.
Have you done the same?
I've not done any sort of like month long or anything like that,
Okay.
but just recreationally, and I just it's very. I think there's a reason why it's very strongly banned in the space area in the States. So like any other kind of outcomes there from that month of microdosing on the shrooms, like was there, did you stop and just feel any sort of like key takeaways, or was there anything else that you kind of experienced or lessons learned from that, or even just if somebody wants to do it now, because it's much more, I think it's either much more legalized now, much more people are open to it. So is there any like is there any just tips or takeaways or lessons as we kind of come to a close here?
Yeah, I think with all natural plant medicines, there's no reason to be afraid of them.
Yeah.
You know, I've done most of them. There's some that are right for certain people at certain times in their life.
Yeah.
There's some that I did that I was not ready for. And there's some that I've done that like changed my life. And I think that, again, all combined with the whole curriculum it will not solve your problems. What will solve your problems is if that's part of a curriculum to change your life with small decisions every single day, stick to your integrity. And I think that process that I embarked on at that time led me to open up my mind and heart to the possibilities that it's worth it to take big risks. And honestly, I wouldn't be in crypto right now.
Without that, eh?
It would not be in Hong Kong. I wouldn't have taken all those risks.
Yeah.
The job I applied for at BitMEX, it specifically said no one outside of Hong Kong can apply to this. I did anyway.
Yeah.
It was just kind of like this aggressive curiosity and bravery that I didn't really have when I was more of a kind of like a underling in a hierarchical structure and system.
That's amazing.
Help me open up to that.
That's amazing. Yeah. Well, congratulations on all the success. Appreciate your time today. Really great conversation as always. And thanks for coming out.
Thanks, man. Yeah, good to be on.
Yeah. Cheers.